Now, the Ghana Stock Exchange continues to be driven higher by strong demand from pension funds, even though the rally has slowed down in recent weeks as the market looks forward to half-year results coming up in the next couple of weeks. Now we speak to Collins Appiah, an executive director at NDK Asset Management, to give us his thoughts on where that market is headed. Thank you so much, Colin, for joining us.
Thank you.
All right, so your thoughts on where this market is headed going forward. We've seen that rally slow down over the last couple of weeks. Do you think it's going to be lifted by those earnings results that we're expecting, particularly from the banks?
I think that we will still experience this kind of volatile weeks because now people are still very skeptical when it comes to what returns or what kind of financials these companies are going to release over the second quarter. You know, the second quarter has just ended, and analysts will probably be waiting to see which report that will be coming out. I mean, taking cognizance from what is happening on the Ghanaian economy as a whole, you know, now there's a whole lot of taxes that are being imposed on these banks, and analysts are believing that probably one way or the other is going to affect the profit margins of some of these companies, and therefore they have to take, you know, a good position to see how they price this stock. Having said that, I also think that pension fund managers are being active on the market compared to those days where only Smith as a pension fund manager on the market who just buy and hold it. Now you get various pension managers who are playing an active role. They buy and sell. They try to take profit as and when it's necessary. And that's what I see the market, you know, behaving this way. But I think on the overall, the market will still be going up and down. But going forward, I will still be okay when we see a positive return from our stock exchange.
All right, so what I hear you say is that the market is likely to trade sideways for a while. But what impact do you think the higher interest rate environment that everyone is expecting going forward, given the spike in inflation and the potential for even further tightening down the line by the Bank of Ghana? So your expectations as to the impact of the higher interest rate environment on the appetite for risk in the equity market?
Surprisingly, this year we seem to see a different trend. Normally, when interest rates are high, you see investors moving from the stock market to the interest rate market or the money market market. This year, when we were going to begin the year, a lot of analysts were predicting that interest rates were going to fall. One way or the other, when the budget was presented, we realized that no, the government still has a need to borrow, and therefore interest rates will still continue to rise. Having said that, because of maybe the pension, we are still seeing a booming on the stock market, whilst interest rates are so high on the market. We believe that interest rates will continue to be high because government now needs money from the system, and the only way he does that, from what we've seen over the years, is by borrowing from the auction market. And anytime he comes out to borrow, you see the interest rate still be at high. So we still expect the rate to be high. And for me, pension funds, especially those who are looking at the security of the investment, who are buying fixed income, will continue to enjoy this high interest rate that are ranging. Having said that, we also know that it also affects the private sector, people who are borrowing to do direct investment in the economy. I think for fund managers, they are very happy with the interest rate that is really happening on the moment.
Okay, let's talk a bit about those levies you mentioned earlier. And what I hear is that the National Fiscal Stabilization Levy Bill and the Special Import Levy Bill have been presented to Parliament, and they seem likely to pass. And those obviously will have implications for companies, particularly those that do international trade. And I was wondering, to what extent do you think this will impact companies that are listed on the stock exchange?
I think when you take the import bill, for instance, my understanding is that yesterday the approval has been given. That means that some of the selected import goods are going to be affected. You mentioned like energy bulk, for instance. Most of these companies, fortunately or unfortunately, are not listed on our market. So you will not see its impact on their market. But one way or the other, if they have businesses with companies that are listed on our market, then you see an indirect impact, which will obviously will be a negative impact on the market. So we believe that these taxes are definitely going to affect companies' bottom lines, and therefore, if it does, those that have some link to the stock market will also affect the stock market in a negative sense.
All right. Recently, we've seen some pressure with respect to the power supply. It's been a little more erratic than usual in Ghana, and I think there are hopes that it will pick up later on. But to what extent has this impacted business, broadly speaking?
I think, as I said, and that's why I mentioned that analysts are really expecting the kind of financial that companies will be presenting for the second quarter, because for the first quarter, we realized that there were some negative impact, especially in terms of how some of these companies' profits were accumulated.
Right.
We are still yet to see what's happening when they release the report, and we see how negatively, but obviously if energy is being an issue on your market, you see a negative impact on some of these companies, and we'll see those that were really affected and those that were able to also have absorbed the shock that came from the energy sector. But I think for now, I might say that things have actually stabilized a bit. The power crisis don't seem to be ongoing. But if you cast your mind back over the past 3 months, you see what was happening, and we are expecting that definitely is going to affect their profit margins. But we are yet to see those financials for us to be able to comment on them.